Good evening, all. Ira Epstein with the Financial Market Wrap-Up, and this wrap-up is for a pretty wild trading day. And today is September 8th, 2022, 6:10 p.m. I'd like to first start off by offering my condolences to all the British people, everybody from the UK, on the loss of their queen. Great woman, longest reigning monarch. Now we get Prince Charles III, so that'll be another part. The pomp and it's just unbelievable what's going to go on. You're going to get 10 days of mind watching. It'll be all over TV as we watch everything that goes on there in the succession, how it all takes place. But at first, it's sad, and we have to celebrate the woman, the longest reigning monarch of the UK. All right. Today was not my raining day, I can tell you that. Early in the morning, I was looking at selling the rally in the market. And I'll tell you, I had spots during the day where I looked pretty good. But by the end of the day, the market had gotten to the point where just didn't make sense. And a lot of the trends were lost. What is going on? Because you saw Fed Chair speak today, 9 o'clock, or was it? I think it was 9 o'clock that he spoke. We saw that the European Central Bank went 75 basis points big. They're talking even more rate hikes. We saw today that the Fed chair came out, and what he did today is he said, no, they're going and they're going to put that genie back in the bottle, talking very tough. We saw Miss Yellen come out later in the day, our Secretary of the Treasury, and she was a political person today. She's talking about everything wonderful Biden has done. She should have stayed in the Treasury. Not much to do. And that's the key. Now, President Biden has put off again the idea of dealing with the Chinese tariffs, but I think he's right in that one. I don't think they should stay on, but I think he's got to get something from President Xi to take it off. They're going to meet at some conference that is coming up. That might be the time to do it, might be the time to do it right before the People's Congress so that President Xi gets something. China's locked down massive amount of people now. I'm reading stories of 200 million people might be locked down in different areas throughout the whole country. It's hard to believe these numbers, but the Murrow was talking about it today. I'm talking the investment house, and it was quite amazing. They have people on the ground there, I guess. All right, so what is going on, though? Why did we rally today with all this, and even Powell saying no, he's going to go with the rate hikes and talking pretty rough? It's because traders, I think, get confused on CPI reports that are coming up Tuesday. They're going to see CPI numbers, and they'll go with the headline number. It's probably down. And they'll say, I'm looking at what's going on in energy prices falling. Food has slipped back a bit here. You can watch me, when we look at the wheat and the corn and other things. I get it. The problem is the Fed throws that out, and it really studies hard what's called core inflation, which looks at the same basket that makes up the headline inflation and then strips out food and energy. I don't think that fell at any pace that they're ready for. And I think that's what the Fed is going to keep talking about. The labor market staying strong. I don't think today's data that we saw in unemployment claims did anything in the way to think that you don't have a strong labor market. So you get markets that need to correct for the sake of a correction, and that's where I think we're at. I don't think this was a change in any manner of anything that's going to last very long. When we take a weekly chart of closes of the S&P, you tell me the number we're fighting at. When we started to break from up here, I kept telling you I thought we'd get back and fight a battle at the 18-day average. You got under it a week ago, you're back up to it. Come on, that's all you're doing. It's back and forth now against that number, and that's what a correction is all about. You corrected from the high down here, and if you can close like this, here's the fear. You start looking at right here, that break low, and we can go back to that. And let's see if I can get that right there. So when we closed there, and this is a chart of closes, at 39.24.5, let's assume the market finishes like this. If next week you close under that, if you did, I would then say, we're now back into the breaking zone. The weak September period could be right on us. October is often weak too. There have been many October crashes. Let's assume that's not the case and the market doesn't do that and goes up and settles over the 40 level. Okay? Next week. that could be further that this market is going to blow away guys like me and we don't know what we're talking about. There's a possibility of it. I've been blown out before. When I look at the daily chart, okay, I thought today you were going to fail on the good rally, and you didn't. You came back, and the market still has a pattern of lower. This high didn't take out that one there. You still have lower highs, lower lows. You haven't broke that pattern. The market's probably going to get up the way I'm thinking now because of today's rally, maybe challenge that 100-day average or higher. You'll see why in a minute. Same thing here, and this is why. I'm honing in right now on what's going on right here. Look at the close today, and this is Thursday's close. You lost the embedded reading. Got a reading over 21. When that happens, the market often goes to the closest main moving average, which in this case is certainly, as you can see, the 100-day, and often you can get to that 18 if they're fairly close together. So I have reasons to no longer be short, and I have to wait for the next setup. Now, could this, already tomorrow, Friday's trade, be false? It is. It could, if both numbers were to close back under 20. The odds of it are very slim. Already the market should have been trying to get down, and now both numbers are over 20. Bye-bye on my short ideas. In the Nasdaq, what do we have here? So let's go, if we could, here and get to the close. On the close today, this is the close. You did not lose the embedded reading. You have a 19.18 number. You see it right through there, okay? So if you see it right through there, and now we go to tonight, no, you got to close over 21. So this is still very much in play. Am I anxious to have a trader ever go short when you're losing that reading? No. I never bet that it's going to re-embed. It could do it, but for my money, no. Then I step over to the Dow. Let's take a look at what this did. And if you look at the settlement here, you did not lose it. Only the S&P lost the reading. Each one of these other indices on a good break tomorrow can re-embed, and then you'll look and say, that was just noise in the market. What happened in the Russell? Did it lose its embedded reading? The settlement, 22.14 on the slow. You have to be out. So two of the market wings have lost their bearish ratings sidelines. Time to do nothing. Probably time to do nothing until you get to that CPI number. It will not surprise me if that is what's going on. In the VIX, it has been acting weak, as I've mentioned over and over. You know, you're not in a capitulation time in any manner. You have to just wait to see what's going to happen through here. When you look at the bonds, they're still very much in a bear pattern. See, here's the confusion. The bonds and notes are acting bearish. You can see this. They're staying embedded. They're making the pattern of lower highs, lower lows all the way through. And yet, you're not getting that play at all in the stock indices. The bulls are, they just want to be a buyer. They want this thing over. I don't think they're right. In the dollar index, what do you do when you lose an embedded reading right on the close? So long. Wonderful time to have been long. This was a beautiful trade to the upside. I had some people definitely participate. And if the dollar is losing momentum, well, then the euro might come up a little bit because 40% of the basket price that makes up the dollar index is comprised of the euro currency. In the British pound, the market is flirting tonight with trying to get back over a 20 level. I don't know if it's going to be able to do it or not. But it's one of these days where, while this market is saying sell me and so many of the others aren't, maybe you hold your hands like this tomorrow. You keep them away from the keyboard and you don't do very much as you wait for the markets to tell you what next as a majority. Bitcoin. Bitcoin's knocking on the door of the 20 number. Now, if it closes over 21, you don't want to be short anymore. Then I'm going to be looking for the market back to the 18-day average. But 19.36 is not closing over 21. So I'd be careful. That's all that it is. It's still very bearish in that market. Brent versus WTI. Look at how this Brent price keeps coming down. And as you can see, you're back to the Bollinger Band the past 2 days, going sideways a little bit, trend down, but you've hit your downside targets. Same thing in WTI. Doesn't mean you can't go lower, but you've hit main targets in those markets. Gasoline, same thing. So in the gasoline market, there was going to be a number where it doesn't keep falling. Now, some of what I looked at today on the EIA numbers, where we had a big build over 8 million barrels in the crude alone, keep your eye on refinery rates. They're falling now. And that means the refineries are likely getting ready to shift from summer to winter blends. And when they do so, you get a buildup of gasoline stockpiles of at this time of year crude and some of the product, the gasoline, because people aren't driving as much right now. So you watch all that. And that's what I think is going on to a degree there. This is a big fight for support at the 100-day average in the Bollinger Band and that gas. I think the smart money has completely gotten out of this market, and they're saying to themselves, hey, I don't want any part of that. You know, I write a lot about these markets twice during the day. I don't know if you're aware of that. Not only do I do my morning subscriber videos, but I put out in the morning, somewhere between 11:30 and 12 Central Time, a written update where I cover what to look for the rest of the day, what the market's looking like, and I update with writing some of the trades that I put out in the morning for the traders and from the evening before. I give you specific entry and exit points, what I'm seeing in the market, why I'm seeing it. I match it up to the video so you get to see the whole chart picture as to what's going on. And I do this for the futures with the updates. On the Spiders ETFs, I just do the morning updates of the videos because I found that's enough. Now, the key is I'm not going to be right all the time. I'm also not going to be wrong all the time. It's going to be balanced. But I think you'll find money management tools are there. Always an exit spot, know where I'm wrong, the reason I'm wrong, and I walk away. That is what trading is about. If you're looking for a guy and everybody wants to find some trader that's always right, okay, go to Kathy Woods. She had a phenomenal record. You've seen what happens. Traders go like this to a degree. My difference is I'm not an investor. I'm a trader. So it's a whole different mentality. When I'm wrong, like I just said on the stock indices, I don't want to be short anymore now. For a while. I wait. It's that simple. What was the risk today? A couple $100? Not very much. In the meantime, if you'd like to get free access to it, let me prove myself to you. It's simple. Go to our website under free offers. You can give this all a try for free. You can also just follow me. Move your cursor right to the top of the screen. There you'll see an icon appear. Click it. You'll be right where you have to be. I'm Ira Epstein. You have a great day, and I'll see you all tomorrow. You take care.